Hi and welcome back. This is the series of Block 7 where we talk about potential risk holding Bitcoin. We have done at least 10 of these and we plan to do more. Today we're going to talk about deflation, because there is also some people out there that say that it's actually a risk for Bitcoin because Bitcoin is deflationary. And I try to explain in this video what it means and what we can actually do, or if this is a good thing, if this is a bad thing, if we have to do anything, or if this will be all okay. So if we look at deflation, first of all, of course, we need to know what is deflation. You may know about inflation. So inflation is actually that prices are getting higher. If you look now into the world, a lot of currency is being created. So that means that the banks or the Fed, the European banks, just print endless currency. And they give the currency away to the banks, and the banks are able to lend this currency out. But they are able to lend this currency out in a much higher volume. So a lot of currency gets pumped into the market, but the problem is it's not backed by anything. So it's just free money, basically, or free currency. And if you have a lot of currency pumped into the market, and for example, if people don't have to work for it, they get it for free, like you see all the checks in the States and also the benefits that people get in Europe, what will happen is you create inflation. And I talked to some friends last week that are in the States, and they told me that they already see quite high inflation in the supermarket. Here we are at the moment in Europe, we cannot see that very much in the supermarket, but we can see it in building materials like concrete, like lumber and so on. This went up 300%, or it depends what you're looking at, but lumber for a time it went up almost 300%. So this is the inflation part. The inflation part means you're getting less for your money. And deflation is actually totally the opposite. Deflation, over time, you will get more of your money. So the goal would be to reduce the money supply and to not pump in money into the economic system over and over again. So it's the Keynesian way of running a country, that you just print the money, try to put the money at the point where you think you need it, and the Keynesian economists think this will work. So this is one side. And also the Keynesian economics think that this will actually be a problem to have a deflation, because what we see later on in the next slides is this will have very much impact on the consumers, on the credit cycles, on how people behave, how people spend money and so on. And of course they don't really want that to happen, because then actually the economic system will slow down. If you want to check out more of deflation, so what is really is in all the details, please just click on the link and visit Wikipedia or read it at a different place. I'm not gonna talk in too much detail about deflation, because then this video would be very long. We also, of course, want to make the connection between Bitcoin and the deflation. Why is Bitcoin deflationary? So first of all, there's a limited supply of Bitcoin of 21 million. If you look at your currency, let's look at the US dollar, for example, or also the euro, or any other currency in the world. Unfortunately, there is no limit on the supply. So countries or banks or whoever is in control can print as much of these currencies as they want. So there is no limit on it. And you have to be aware that there's also a lot of cryptocurrencies that don't have a limited supply. So if you value a cryptocurrency, you should always go out and see, does this currency, does this asset have a limited supply? So in the case of Bitcoin, it's 21 million. A lot of Bitcoins have been lost already, and not all the Bitcoins are mined till now. And in the case of Bitcoin, every 4 years, there's something that's called Bitcoin halving. And the Bitcoin halving will actually halve the supply of Bitcoin every 4 years. That means, let's keep it very simple. Let's say like there would be a year where you would mine 100 Bitcoins, and after the halving in this year, you would just mine 50 Bitcoins. So the supply is actually going in the other direction. You know that the Bitcoin demand is actually getting much higher and higher, and this is good for Bitcoin, of course. But on the other side, if you also take away the supply and you have more demand, then this is actually the best model. But this, of course, causes that Bitcoin is deflationary. It will not inflate because we are not pumping whatever into the market. Of course, this will have a big impact on credits. If you have deflation, you have to make it all real, I would say. So there is no way to get a very cheap credit like we have now. If a deflationary currency would come in, or if we have a deflationary asset that we all use, basically credits would be very expensive. You could say it's because it's a fair payment that you have to do. Now, I mean, if you take some money from the bank, it's almost they're gonna pay you extra if you take a credit, right? So it's not fair. It's not in any balance. And if you would have a deflationary asset, then there would be the problem, or the thing that people will not have so much credit. And of course, if they don't have so much credit, they are not so good consumers, so they cannot spend so much money. And also the GDP, of course, would rise very, very slowly, because you don't have all this fake money, this currency that actually does not exist. You cannot pump it into the economic system and inflate the numbers, basically. But you have to ask yourself, wouldn't it be better to have a stable, backed asset that is real, not just building up bubbles again like we did over the last thousands of years? So it's always the same. It seems like humans don't learn. So I think it would be a very good idea to have a stable store of value like Bitcoin, or this could also be gold or silver, something with a limited supply. And the advantage for Bitcoin is that we know how much supply we have. For gold and silver, we don't really know. And with gold and silver, we also have the problematic situation that we have all the ETFs and so on. So there's much more gold sold, paper gold sold, that actually exists, as you know. And with Bitcoin, we would have the verification, because it's all on the computer, it's all verified by the blockchain. It would be very clear that this amount exists and not more. So it would actually be a control mechanism, and countries, if they would apply it, could not just print more and pump more into the economic system. So in this case, I'm recommending, or I would go the way in going down again, going back to the roots, trying to build up a sustainable economic system, avoid to print too much credit, too much fake money into the system, pump up the stock markets, wait for the next bubble, have it go down, have people losing everything, and start over again. So it would be, in my eyes, a much better way to build up slowly and steadily and have real value, give people real value for the work they do, give people a chance to save money. If you have inflation, you have money in the bank, your money will be gone automatically. With the inflation, it's already also a hidden taxation. If money or currency inflates, then it's very likely that you get into the next income bracket, And if you're in the next income bracket, you pay more fees or social security or taxes, and then it's getting less and less. So it would be, in my eyes, a very good idea to have a hard asset or a hard currency as base value, but it is a risk for Bitcoin because if people will not take credits anymore, it's hard to take credits, and you can't pump up the economic system, you can't build up these bubbles, you cannot finance any wars anymore, and so Bitcoin is deflationary. There's the theory, the thesis that this could also be a risk. I hope this was useful. If you watch this on YouTube, please give this channel a thumbs up, subscribe to the channel. We've got a lot of interesting videos coming up, and you don't want to miss out on that. Take care, have a nice rest of your day, and I talk to you soon. Bye bye.